Hi there, everybody. My name is Lee Schwartz, and I am the Director of Business Development for SVA Certified Public Accountants. I'd like to welcome you to part one of our vet webinar series. Today's topic is get ready to buy or sell your vet practice. Now, before we get started, I want to just take a sec and say a few words about SVA and our history with veterinarians. Like many of you, we got to where we are by being independent, and our vision moving forward is to remain that way and continue serving the same clients we have since 1974. And a huge part of that client base over these last now almost 50 years has been within our healthcare practice, which includes medical, dental, and of course, vet practices. Our mindset is that when you're a practice owner or shareholder, you have to work with someone who's more than just an accountant or tax preparer. You need someone who's a true advisor working collaboratively with you. And this webinar and others like it, which we'll tell you about, are one small way in which we do that. On a similar note, you may have seen our emails recently about our veterinary salary and benefits survey. The more practices that participate, the better the survey data will be. So only practices that participate will actually receive the full results. That's going to help them remain competitive in what is obviously a very difficult hiring and retention environment. Now, the deadline to participate was last Friday, but if you submit your practice info by the end of the day tomorrow, we can still include it in the study. So please do that if you haven't already. As far as this webinar goes, please send in any questions you may have as we go, but we'll wait until the end to actually answer them. If you're a client and your question doesn't get answered, we'd encourage you to reach out to your SVA contact. And if you're not a client and you have a question that doesn't get answered, please reach out to me and I'll make sure one of our subject matter experts gets that question answered. So let me briefly introduce our speakers. We've got two of the most experienced people in our healthcare and veterinary practice to walk you through everything today. We have Andy Slinger, who's a principal, and Nate Drykosen, who's a manager. Both of these gentlemen are CPAs and work with practice owners and practice managers on efficiency, tax strategies, and profitability strategies. So sorry about the long intro, but Andy, I'm going to let you take it from here.
Awesome. Thank you, Lee. And as you mentioned, we're very excited to launch our latest series of webinars with you. Hard to believe it's been a year, but so much has happened. You know, on the negative side, staffing challenges, rising costs for everything. But on the positive side, many of you are experiencing still record revenue year over year, leading to questions of how much is my practice worth compared to where I was 3 or 5 years ago. And then naturally, once you're finding out about that, you're thinking, is it time to sell or should I start thinking about that? Which of course leads us to today. There's so much buying and selling going on. Obviously, a lot of it is being spurred by the corporate activity, the private equity, those firms looking for places to invest that money, and vet practices right now are an extremely good opportunity for that. Obviously, that's been very good for the sellers. Okay, because what they are receiving in exchange for their practice has never been higher. Obviously, we could have a separate debate on what that will mean for the veterinary industry long term. But for now, you're looking to sell, corporate practices want your practice. And obviously, there's still the opportunity for the private sale, which we'll talk about today. So this is a series, and I think it's really important that for those of you that plan on joining us for the entire series, I want to just give you a very brief overview on what to expect in each one, along with what you've seen in our information. Today is buying and selling 101. Okay, very high level. We'll come back in October, and as Lee said, we'll present to you the results of that survey, which everybody's highly anticipating because we get so many questions on that with all of those staffing, retention, recruiting challenges that you're facing right now. In November, that's really to answer the question of what's my practice worth and how do I find out? What is the deep dive of that process? And that'll be presented by two of our experts, certified valuation analysts, who will, they actually do the valuations for our clients. Come back in December, I have a price now. What do I do? And then lastly, in January is, the matches happen. There's a buyer, there's a seller. What's the process to get to the finish line? So that's really the high level overview of where we are and really where we're going. So to get a sense of our audience and to potentially tailor our presentation a little bit today, we thought we would start with a poll question. So which best describes your situation? Just pick one. You're either looking to buy a practice within the next 1 to 5 years, looking to sell within the next 1 to 5 years, maybe a seller, but not sure of my timeline, and maybe a buyer, but not sure of my timeline either. Give you plenty of time to answer. Okay, so by really an overwhelming majority, we have basically combined 86% of you joining us today are either, you know, you're selling within the next 1 to 5 years, or you know you're selling someday. You just don't know when. And then the minority is a buyer. And that, honestly, that's what's going on right now. We don't have any corporate entities joining us. And honestly, that's who's buying practices, is corporate entities. It's really challenging to find the private buyers. So our presentation, in full disclosure, is tailored a little bit more to the selling side in anticipation of that, but you will get both sides. And obviously on the buy side, we can continue the conversation anytime. So anytime we are meeting with, you know, a client who's ready to sell their practice or a potential new client, we really take them through the same process. Okay. And that's what we're going to cover today at a very high level. We're going to cover the when, the what, the who, of course, how much. And then, you know, really importantly today at the end, it's what should you be thinking about now? What are those next steps? So hanging on here and talking about the when. Life happens, right? And every once in a while we have to do something under duress. We have no choice. Time is imminent. But the thing I want to stress to you today is you want to avoid that when possible. You want to control what you can control. So before you get to that point, start thinking, okay, when is my ideal time to sell? Have I accumulated enough wealth after the sale of my practice and or real estate to live the lifestyle I want to live? And whatever next chapter comes in my life, that's one factor. Two, is my practice ready? Have I built it? Or you know what, is it going to take 2 or 3 years to build that practice and maximize the return that I get and leave my legacy where I want to in this practice? It's really important that you control what you can control. You're only going to do this once. This is your golden goose. This is your baby. So put the stake in the ground. Pick a date in the future that this is the date I'm no longer the owner of this practice. You can always move it, but we just find it so important to put it in the ground. Otherwise, it's just that never-ending football that you keep punting down the road. No, put it in the ground. And the other thing I want to emphasize today is you want to build and accelerate toward that finish line, okay? A lot of people sometimes think initially, all right, well, time to slow down, I'm going to sell. Well, no, you don't want to slow down. If you slow down, you're going to potentially take hundreds of thousands of dollars away from what you're going to get from the sale of this practice. So it's important to know the date. That way you can put a plan in place and accelerate and build toward that finish line. There's a lot of planning involved, and there's a lot of factors that will affect the ultimate value of what you get for that practice. So think about the when, put the stake in the ground. What I want to do now is I want to turn it over to my colleague, Nate, and he'll really take you through the what, because it's really important to understand what is it that I'm selling and what are the various components and how should I be looking at that. So Nate, take it away.
Thanks, Andy. So at a high level, I think most practice transitions can fall under two kind of general broad categories. One being an asset acquisition and the other being structured as an equity acquisition, where they're actually buying or selling the actual stock in the entity. Asset purchases in particular is far and away what we've been seeing more and more and seem to be more common these days. We'll to get more into it a little bit later, but really we find that asset purchases tend to reflect specific valuation. What are your assets worth within the practice? That can be everything from your accounts receivable, your inventory, equipment, those sorts of things. Equity sales just are infrequent and tend to involve inheriting your liabilities, which usually isn't desirable no matter what your buyer is. In terms of tangible assets, there's kind of three categories that we usually see specifically mentioned in purchase agreements. Accounts receivable, inventory and supplies, and equipment. Starting with accounts receivable, usually this is determined, the value is assigned somehow at closing based on actual collections. And sometimes the buyer will throw out extremely old receivables, assuming that they're uncollectible in that. So it does help keep your accounts receivable current if they're not. Inventory and supplies are usually determined at closing. Sometimes the purchaser would want some sort of a manual account. Sometimes they will utilize whatever practice software you're using as a starting point for the value they're assigning to those items. And equipment can be valued a few different ways. It can either be appraised by a certified appraiser. It could be appraised to a common agreeable method to fair market value. And sometimes it could be calculated based on assuming that most of your equipment should be depreciated straight line over a set period, say 5 or 10 years, with some sort of percentage of value remaining at the end of that useful life. In most cases, that value tends to be right around 10%. So additionally, in terms of these kind of big three categories, sometimes we do see leasehold improvements and buildings purchased as well as part of practice transitions. Sometimes this piece is acquired. Sometimes the buyer might be willing to continue a rental agreement or restructure a rental agreement, especially if the seller of the veterinary practice also owns the real estate. A lot of times, leasehold improvements, if they are going to be sold, are going to be valued over a longer time horizon, anywhere from 15 to 30 some odd years, with straight line depreciation and again, some remaining salvage value. Buildings are obviously extremely valuable piece to the owner. And if you're a veterinarian that's fortunate to also own your building, typically you'd want some sort of certified real estate appraiser to value your building before you'd begin those discussions about actually selling your building. Beyond the tangible items, right, the items that you can see every day and encounter and use in your practice, there's kind of this group of assets called intangible assets that often include items such as goodwill, non-compete agreements, client lists, trade names, and any existing contracts that you may have. Typically, what they're trying to get at with these intangible assets is what is the value of a right to earn income off of everything that has been built up within this business. And the value that can be assigned to these items and calculable methods can really range depending on situation. But there's a number of factors that are commonly considered as part of the goodwill determination. And that can include items such as the physical location of the practice, the current status of the lease that is in place or the ability to restructure into a new lease, the actual physical condition in the facility. And that is important because if there's potentially costly upgrades in terms of equipment, add-ons needed, that might impact the value of the fair market value of the equipment piece of this acquisition and the total price, which will then indirectly filter its way down to the goodwill and intangible items. Some other items that are commonly considered is, what does your current fee schedule look like? If the purchaser believes that it might be a little bit low for the area, they would see that as a potential opportunity to increase profits virtually immediately. Also, what is your current expense structure? If they can take a look at your income statement and see some redundant expenses or maybe some of the administrative expenses that are crucial to running a practice, but they might be able to consolidate or save through some efficiencies and some of their expertise. Those are opportunities in order to improve their profit as well that would affect your value. And kind of at a little bit more higher level, are you offering all the services right now that you'd be able to, that your community will support? Are there capabilities that you could potentially provide that are not offered anywhere in your vicinity? Most of those opportunities tend to be a higher dollar value mix of services, which ultimately increases your total revenue, and provided costs and expenses are managed by the purchaser, would ultimately flow down to a greater net income for them. So to kind of tie all of these pieces together, thought we'd touch very very briefly on some of the common payment terms that we see often associated with each of these items specifically. Accounts receivable. Oftentimes, a buyer will want to assign cash in particular to that at closing through some sort of valuation method. Supplies and inventory kind of more or less are valued the same way, and those are often just paid cash for what is on hand. Equipment is often paid with cash at closing, and same thing with leaseholds. And goodwill can be paid possibly with a combination of cash, but it more or less depends on the source of financing. Especially we're finding with some of the larger national groups, there might be some opportunity there to defer some of the value of the purchase with some ownership interest in the buyer's entity. So one kind of byproduct of determining these payment terms, which would be set probably or substantially with a letter of intent and could change all the way up to closing, one of the byproducts of this allocation is what's called a tax allocation. This is an allocation that must be contained as part of the agreement. It may or may not be drafted at the agreement time, but it will come out eventually. And both the buyer and seller need to complete a specific form and include it with their tax returns. This is important because this specific form discloses to any taxing authority how this purchase price is being allocated and declaring how those items will be treated on both returns. So the crucial issue is that if both a buyer and a seller file one of these forms and they do not match, it's a pretty much guaranteed notice and a headache with the Internal Revenue Service and whatever state agency currently has jurisdiction for your practice. So to kind of provide some perspective on each of these items, we'll start with the seller's viewpoint and how they might view the structuring of the deal and what might be important to them. Obviously, there's the concern of maximizing value. For some people, that is the utmost importance. There's also the concern with, okay, what is going to happen to my practice as I transition out? Is the culture going to change? Are a number of my key staff going to leave? Are a number of my staff that I care about and have worked with for a number of years going to be terminated by an acquiring entity? And then also, if I sell to an associate or if I sell to a national group, specifically, if you sell to an associate, you might have a really good idea of how you'd like the deal to be structured. And for the most part, they might kind of have to work more closely with you. National groups have a little bit more freedom and they have a lot more flexibility with how they can structure the deal in combining cash offers with equity. The key piece is to pay attention to what exactly is included in the deal and how much is cash versus equity, and if there's any incentives and what the commitment is for the seller in order to reach those milestones. From the buyer's viewpoint, as an associate, for those that might be looking to sell to associates, they tend to favor paying this off over time. You know, it's important to keep in mind that this is going to be a huge investment for them and is actually going to put them into a negative net worth situation just because of the fact that they're likely going to be highly leveraged, which is certainly scary for many people. They're thinking about, where do I get these funds and how am I going to pay this off? It just seems like this really abstract goal. But the nice thing is there are a lot of banks that are willing to lend to young veterinarians, which we'll get to a little bit more later in our series. But some items that they would be concerned with is, as you look to transition out, would be they're going to value your mentorship. You know, they, in most cases, don't want you to just hand them the keys and walk out the door, especially if they're fairly new into the veterinary career field. Circling back specifically to some of the items being purchased and how that might relate to any kind of buyer, be that an associate or a national group, accounts receivable, inventory, and equipment and leaseholds, if that's included, a buyer is going to want to really nail down a value that they can put on their books and records for those items. And then from those values, they can calculate and deduct depreciation and any acquisition costs as they're incurred. So for the most part, the buyer is going to want to pay as much cash for those items as possible. The intangibles might be a little bit more flexible. So that brings us to our next poll question. if you're a potential seller, is your preference to keep the practice locally if you can find a buyer, selling to a corporate entity, or considering both options to maximize the value that I'd receive? All right, so surprisingly, a little bit more even than maybe we were expecting. Right now, it looks about 40% want to keep the practice locally owned, 38%. Now, about the same amount would consider both options and maximize the value. And about 25% of our folks in attendance today are thinking that they're most certainly going to sell to a corporate entity. So now that we've kind of touched on some of the structure of what one of these might look like, we're going to circle back on one of the concepts we mentioned briefly and how some of these assets might get their values, and that's a practice valuation. So I'll give that back to Andy to provide some insight.
Thanks, Nate. I want to comment briefly on that poll question because that was kind of what I was expecting. It's a real even mix, you know, and it's a loaded question because if you're in a rural area, that's going to potentially affect your options. You know, if you're trying to keep it a locally privately owned company for very personal reasons, community reasons, you know, you need to have and develop those associates, recruit them. Or it's a potential competitor who's looking to expand their footprint in the community and have multiple locations. So options can be limited, but I like the fact that, you know, our audience is really, you know, considering all their options, depending on, you know, where you are and when you're looking to sell. So leads us to the next question, of course, is, so what's my practice worth? Okay, we get that question every week. Now, you might be doing it now, early, doing a formal valuation, even though you don't even know when you're going to sell. You may not sell for 5-10 years, but, you know, you want to know what's my practice worth today. And not just that, you know, when you have our experts do a formal value to your practice, they go through it with you and they say, hey, if your fees are low compared to your peers, they benchmark a lot of your overhead and they give you suggestions based on, you know, what they're seeing in the marketplace of how to improve the value of your practice. So that's something that you might do early for future benefit. I always say you want to negotiate from a position of strength, you know, not just, well, I've heard that practices are going, no, not just internet research. You have a report, you've gone through it, you've tweaked your practice, you know what it's worth, and you're negotiating from a position of strength. The actual process can take 60 to 90 days from when you get all the information to us. Obviously, there are also brokers out there that will do this. A lot of times they'll do a valuation for free in exchange for brokering your practice. Obviously, they're going to make a lot of money someday on the percentage of the value that you get for that practice, but we'll talk more about that down the road on the decision of, do I need a broker or not? Obviously, the process, we request a list of information from you. We take a deep dive into your practice to really get to know the tangibles, the intangible, the location, your equipment, your fee schedule, your procedure mix. It's a very deep dive into your practice. No matter when you do the first round, you're going to want to update that valuation, that price, you know, within that final year of sale, because you want the most recent financial information to be going into that. Part of the due diligence process, the buyer is going to demand that. You know, they don't want to know what happened 5 years ago. They want to know what happened last year, 2 years ago, maybe 3 years ago, and how things are going right now. The process really right sizes your overhead. Revenue is revenue, very important, but right sizes your overhead. You know, maybe your staff wages, maybe you run really thin, or maybe for whatever reason you have heavy staff. Okay, well, they right size that to what they expect to, you know, what would be expected as a benchmark. Same thing with your rent. What is that expected to be? And veterinarian compensation. A lot of times, you know, veterinarians may not pay themselves what's considered a fair market value salary as a percent of production. So, you know, we right size that to really get down to EBITDA, earnings before interest, taxes, depreciation, amortization. Some people also call it real cash flow. Some people call it seller's discretionary earnings. But so many sales right now are dependent on what your EBITDA is. And then the eventual sale price is a multiple of EBITDA. And again, our experts will tell you, but what we've seen in a private sale, it's inching up maybe in that 5 to 8 times multiple. Corporate sale, 7 to 10. I've heard of an 11. It just depends on a motivated buyer. You always want multiple people fighting for you. It's always going to improve that offer that you get. So that's really the process of actually getting the valuation, why you do it, when you do it, what it's going to look like. So the question then that you have is, okay, well, what can I do now? What should I be looking at right now? Revenue is so important. The other thing I could have said on the last slide is, once you get that price, the first thing you're going to look at is you're going to be like, okay, EBITDA is nice, but how does it compare to my revenue? And as long as it's somewhere north of 1 times your annual revenue, you're going to start to be happy. And obviously you're going to work as high as you can as a multiple of one times revenue in your practice. So you want to increase that. You want to look at your profitability. So what do you do on those 2 areas? Are you charging enough? I mean, veterinarians historically, almost to a T, will admit to me, yeah, I know I don't charge enough, but it's hard to increase my fees. Well, it's time, especially now. You're paying more for everything from your staff to your lab to your supplies, maybe your rent. It's time to right size and charge the right fee for the value that you're providing. A 5% increase can lead to hundreds of thousands of dollars more down the road when you sell that practice. So make sure your fees are in line to the value you're providing. Benchmark your overhead. Is something holding you down? Obviously a lot of practices right now would be growing even more, but you're missing an associate. You can't hire an associate in a rural area or wherever you are. So that's a factor. Okay. Maybe you're looking to expand your hours. Maybe you're looking to expand the services you provide. Maybe your space, maybe you're confined by space, or your space isn't suitable to what you're trying to do. So all things you can be looking to, what is holding me back right now and what's eventually going to really affect the sales price and the value of my practice and my real estate. Someone comes to your house or is going to come, you clean up. If you're going to show someone your books as part of the due diligence process, please clean them up. We see when we take on clients, they give us their QuickBooks. They're like, I have no idea what this says. I have no idea how much money I make. I have no idea what my expenses are. Help me. It's very important that you understand your numbers. You clearly have a top line for revenue. You have your middle line or your overhead, and you have your owner's compensation, all your benefits, your salary, everything, so that you really start to know EBITDA. You start to know your seller's discretionary earnings. You start to understand your real cash flow in that practice. So work with someone that can clearly show you the various components of your financial statements. Do you understand your profit centers? Do you know your various sources of revenue? Are there additional sources of revenue that are opportunities to you to really improve the overall value and makeup of that practice and make it more attractive to the potential buyer down the road? Be amazed how many times we ask a new client, can we see a copy of your lease? Well, I don't have a lease. And it's understandable. Many of you own the real estate and you own the practice. Well, it's a good thing to go ahead and work with an attorney. Hopefully the eventual attorney you'll use for the sale of your practice. Get a lease in place. It's really important to have all your documents lined up, just like clean financial statements, so that you can present them to potential buyers. I'm not buying a practice if I don't have a place to practice, right? So if you're going to hang on to the real estate and I'm going to lease from you, I want a new lease. I want a guarantee that I have a place to practice for the future. Otherwise, significantly would diminish the value that I'm willing to pay for that practice, if I'm even willing to entertain the possibility. One last thing here is we still see a lot of times that your financial statements will commingle your practice and your real estate. Obviously, it's very important that those are separated depending on your situation. So consider that and make sure you continue that conversation if that's a possibility for you. Like we said, you want to start this process at least 3 years ahead of time, unless there's something that's forcing you now to do it quickly. The other thing I'll say to you here is line up your experts. You really want a consultant, an accountant who's really helps you understand your numbers, explains them to you, and builds you and accelerates you toward that finish line. You're going to need a really good attorney. You're only going to do this once. It's your golden goose. It's your baby. You want to do it right. We just had a conversation with a client who's selling, and they had a real hard time with the attorney on the other side, getting to the finish line. And there were some things that honestly, I think with some better communication with the attorneys, could have prevented some, now clunkiness that's going to happen in the tax reporting process. So it's important to have a really good attorney. And depending on if you're the buyer or the seller, if you're going to have to, provide some financing, you really want to talk to bankers and be ready, for whatever you might need. And bankers are lined up. They knock on our door and they want to work with you. So, make sure you have a banker who's putting you in the best position for the future. Okay, looking at the time, I've gone right up to what we allotted. I'm going to give it back to Lee at this point and see if we have any questions that have popped through.
Yeah, thanks, Andy and Nate. Yeah, a lot of information. This always happens. We always think we're going to leave enough time for Q&A, and then there's just too much to talk about. We did have a couple questions come in, but they were very, very specific to these people's practices. So I think just in the interest of time, let's skip that. And I just want to let everybody know, you can go to sva.com/vet series to sign up for the other webinars in the series. You can also find news and information that may affect your business. And that October 20th webinar is where we'll review dental staffing, veterinary staffing stats, trends, and tips. And on that note, there's one last shout out for our 2022 veterinary salary and benefits survey. I mentioned it at the beginning, but the deadline to participate was last week. But if you submit your data by the end of the day tomorrow, we can still include it and you can still get the study. So please go to sva.com/vet2022 and fill it out if you haven't already. And just one last reminder, the SVA team is only a phone call or an email away. So if you're a client, reach out to your SVA professional as questions arise. And if you're not, you can contact me, Lee Schwartz, and I can get you the help or the answers that you need. So thanks for attending today. We hope to see you at all of our next webinars and hope you enjoy the rest of your afternoon. Have a good day.